What's up, y'all? Today, we're talking about something that used to be untouchable, the Federal Reserve. For decades, the Fed operated like it was on its own island, untouchable, insulated, above the political fray, but that era has just ended. Two Supreme Court rulings came down in the past few weeks, Trump v. Slaughter and Trump v. Cook, and between the two of them, they really just rewrote the rules on whether a president can fire people who run our nation's monetary policy. Here to break it all down is Kyle Campbell. He covers the Fed and bank regulation for American Banker, and he's been in the room on the calls, reading the rulings line by line, so you and I don't have to. We're getting into what these rulings really mean, what happens if Trump succeeds in removing Fed Governor Lisa Cook, and whether Kevin Warsh can keep this thing independent, or if he becomes what one senator calls a sock puppet. Let's get into it. Give it to me straight here. Did every other agency just get chopped at the knees with the Fed being kind of the proverbial last man standing here? What's going on?
Yeah, that is pretty much what has happened, thanks to this pair of rulings from the past few weeks. But at the same time, this is an outcome that I think a lot of people saw coming for a while. This is kind of how the Supreme Court operates. They forecast things and decisions that were made in the past that ultimately get undone. It's kind of like death by a thousand blows, but we definitely had the ultimate blow for pretty much every other agency in the government besides the Fed.
Got it. I guess, the CFPB, they're dismantling.
Yeah.
The current kind of narrative around agencies and I guess you could call it bureaucracy are perceived in the wild by this administration. It's coming as no surprise to many people.
That's right. Yeah. I think what is sort of surprising is that I think some people thought that there was more legislative protection, or at least judicial protection for these agencies that were deemed to be independent. And independent has typically meant that you are insulated from being sort of removed if you're appointed and confirmed by the Senate, that you can't just be fired for no reason. The way it has been described to me is like you either don't show up to the job or you show up drunk. It's like that was sort of the standard, or at least what was thought to be the standard. And now it's basically, hey, like even if you're in one of these like independent agencies, you can be let go just the same way as if you're working for, the Justice Department, the Defense Department, these sort of like, more traditional cabinet level appointees. So that distinction really doesn't exist anymore, thanks to these Supreme Court ruling that had sort of an adjoining ruling that came out at the same time that was just about the Fed.
And so the Fed is in theory independent.
Yes.
However, if push come to shove, and to use Warsh's wording here, he could be turned into a sock puppet.
Yes. And I will say that I think Warsh was sort of channeling Elizabeth Warren there, because she loves to use that sort of imagery of the sock puppet. But yeah,
Okay.
Yeah, the idea is, so you had these two cases. One is Trump versus Slaughter, which has to do with an appointee to the Federal Trade Commission who was fired by Trump last year. She basically said, hey, I'm an independent agency head. You can't just fire me without cause. The Supreme Court said, actually, yes, they can. And there's really no such thing as an independent agency in the traditional sense of this sort of insulation from presidential firing. But they did say that there was an exception for the Fed, and that was sort of fleshed out in another decision which came out on the same day, end of June, which was Trump versus Cook, which is a case involving a sitting governor on the Fed who Trump has tried to fire. And the Supreme Court basically just said, yeah, the Fed's different because it's different. I mean, if you kind of dig into it a little bit, they go into the history of central banking in the United States. They say that there's a sort of a time-honored tradition here that the central bank should be independent because we want to have monetary policy totally protected from the sort of whims of politics. But people who are sort of sophisticated, watchers and readers of the Supreme Court say that this decision is a little bit shaky and doesn't really justify the conclusion beyond, I guess, the shadow of a doubt. Let's say.
So what do you think will come first? Trump pushing the precedent or there being another ruling inbound?
Yeah. So I think that Trump will continue to try to push the precedent by continuing his effort to remove Lisa Cook, who's the governor who was involved in the Trump versus Cook case. The Supreme Court, what they did is they didn't say that, hey, you cannot fire a Federal Reserve governor. They just said that you couldn't fire one the way that Trump has tried to, which is that you couldn't just sort of say immediately, hey, like you're done, get out of here. You have to go through a process. So I think the Trump administration will go through that process. And as that process plays out, it'll set a precedent for what sort of bar has to be met for removal. And that could be a very high bar. It could be a relatively low bar. We'll see over time, but that's going to take some litigating that will probably run. That process alone could take till the end of Trump's term. We'll see. There are some other potential cases involving the Fed that could end up in front of the Supreme Court. Maybe they pick away at this issue of removability, but I don't think it's going to be a sort of a slam dunk. I think if any of these cases do reach that level, they'll probably just be sort of incremental in the way that this ruling was. So I think you're going to really need to get Cook all the way to the end and then have the Supreme Court really be pushed to make a final ruling. And I think that'll probably be many years, but we're in this limbo state until then.
Got it. So let's take it to the end here. Let's say that Trump is able to fire Cook. How does that change tactically, operationally, strategically, the relationship between the president and the Fed?
Nobody really knows. And the thing is, a lot about what the way the Fed operates is they try to avoid stepping over any hard lines, which is to say, if there's something that is sort of questionable, they kind of take a wide berth. So a really good example of this is on regulation. So the reason that the Fed is the sole independent regulator is that it regulates bank holding companies, it regulates banks that are sort of state chartered members of the Federal Reserve System. So it has a pretty large remit as a regulator. And it could, in theory, use that to say, hey, we're going to sort of chart our own course on regulation, regardless of what other regulators want to do, regardless of what the administration wants. But the history is that it has always sort of moved with the pack, so to speak. It's always said, hey, we're going to do joint rulemakings when we change a regulation with the OCC and the FDIC. Or they'll do things that are sort of directionally in line with what the sitting administration wants. Like they were a part of this thing called the greening of the financial system that was sort of, you could say aligned with what the Biden administration wanted. And then when there was the change over, they left, and like, that was never an explicit, hey, the White House told us to do this, we're going to do it. It was always just sort of, hey, we're kind of keeping in the spirit of things. I bring this up because this will sort of exemplify how the Fed just says, hey, if there's an iffy issue, we're going to keep very, very far from it. So now if we're talking about a situation where, hey, the president can fire a governor for X, Y, or Z reason, I'm assuming you're going to see governors that are sort of saying, hey, we're going to really, avoid doing anything that could put us into that territory. Does it end up becoming a situation where, it is just sort of an at will? I don't know. We'll see. I've heard different things about different levels of concern from people who have a lot of experience in this space. Some say, hey, if you're someone who wants to be on the Fed board, you're going to sort of vote your conscience no matter what. If the president fires you because of it, you'll live with that. Others say, hey, this is going to kind of turn it into a crony enterprise where you only get on the board by doing exactly what the president wants. I think there's some safeguards.
That's the fear.
Yeah, that's the fear. I think there's some safeguards in place to make sure that doesn't happen. But anything is possible now in this sort of evolving reality that we're in.
Talk to me about the safeguards. What are they?
It still is hard to put someone on the Fed board, right? So what these decisions do is it makes it easy for the president to remove someone, which, there are situations where you're standing one vote away from your preferred policy outcome, and you just fire this person and that's all you need. That I see as being an uncommon situation. Usually it's going to be like if you're really trying to move things in a totally different direction, you're going to have to put people on that have a like mind with the president. And the appointment process to get onto the board of governors is still a pretty substantial one. We've seen even under Trump where Republicans pretty much go along with what the president wants. They will still sort of hold the line on the Federal Reserve. They did this in the first administration. They kind of waved off, probably three or I think it was two or three candidates for the Fed board that Trump either formally nominated or talked about nominating. They just said, hey, these people are too far outside the mainstream. We don't want them. And then you saw that a little bit with Warsh in that Senator Tillis, who's on the Senate Banking Committee, said, hey, I will not move Warsh forward. I will vote against it with the Democrats until the administration drops the investigation into politics. So he wanted to make sure that there was this sort of separation as best as he could. So unless we see a real change, a real radical change in the Senate and how they approach the Fed, I think that appointment process is still going to be a good governor on who actually gets onto the board and who actually gets a vote on the FOMC.
Okay. So there's kind of enough sacrosanct perspective on the Fed and the way it operates that people don't want to mess with it too much.
I think so, yeah. And there's a history of when presidents pick a fight with the Fed, it doesn't really look good for them. The voters don't like it. And I think there are more red lines on this for the administration or future administrations to sort of steer clear of. And they're not necessarily legal red lines, but it's the popular sentiment. People like a Fed to be independent. They like to feel like we're in the hands of technocrats on this particular subject.
Got it. Yeah. So if you're the president and you want to go head to head with the Fed, you got to be careful. And there's an expression that our 98-year-old grandma uses that I think is great. And it's be careful what you wish for because you just might get it.
Yes.
And, if you push the Fed and you get what you want and you get let's say, the rate that you want and the economy tanks, well, everybody knows that it was really kind of by your design.
Right.
And so it's like a Pyrrhic victory scenario.
Absolutely. And yeah, I think you've seen some presidents who kind of acknowledge that they would rather have that distance so you can kind of scapegoat the Fed a little bit. There wasn't really a whole lot of exchange between Biden and the Fed, but his approach was basically like, we're going to leave inflation to the Fed, which is to say like, hey, if inflation, goes through the roof, that's the Fed's fault. If rates have to be jacked up to stop it, that's the Fed's fault. And honestly, if you're an elected official, there's a lot of logic to that to say, hey, like we want to have something that we don't have control over or we can't control because then it's you can't wear the blame for it. There's usually not a lot of credit given to the Fed when things are fine. I mean, we've had some periods like the Greenspan area where the Fed's gotten a lot of praise, but typically it's either operating in the background, nobody's paying attention to it, or everyone's mad at it. And if I'm a politician, I think I probably wouldn't mind having that sort of relief valve.
Sure. Nice little off ramp.
Yes.
So something's happening this week with the Fed. Talk to me about what's going on.
Yeah. So it's the Federal Open Market Committee meeting, which is usually where the chair gives a big speech sort of about the course of action for the second half of the year. But this coming meeting will be a chance to see how the Fed deals with an escalation in the war in the Middle East. The last FOMC, we were in sort of a cooling moment for tensions with Iran, and we're seeing price level inflation slowing down. But now we're seeing prices tick back up. So the Fed's going to have to make a real judgment call here. They can't just say, hey, here's our classic data points. They say do this, we're going to do it. They can do that, but then they're going to have to explain why they're looking past what's going on with oil prices, with treasury yields. The Fed's going to have to really explain its rationale for whatever it does. And that's going to really test this limited communication regime that Warsh has championed thus far.
Got it. Do you think that the Fed has any connectivity into the Department of War? Like, is there any type of interplay between these two organizations? Because obviously what one does impacts the other.
Yeah, it's a great question. If you look back through history, there have been moments where this interconnection is very clear. In fact, like the moment where we sort of first had this concept of an independent Fed, going back to the 1940s, really, it was over the financing of the Korean War, and the Fed basically said, hey, we're not going to kind of go along with what the administration wants, which is low rates to, finance the war. We're in a very different environment right now on many fronts. I don't think that there's that sort of, we need to lower rates or anyone saying, hey, Fed, lower the rates so we can finance the war more easily, because right now the biggest hurdle to financing the ongoing conflict is through Congress. But I do think there are some overlaps there. Are they talking to each other? I don't think there's really a lot of history about there being coordination between those two parts of the government, but we'll have to see that over time, because certainly the Trump administration has tried to really centralize and consolidate things. If we do find out that there's been some communications between those two parts of the government, I think that would be it'd be interesting, it'd be precedent setting. But I don't think that that's sort of a day-to-day driver on the mission for either the Fed or the War Department.
Got it. Okay. Maybe it's happening on the golf course, but no one will know.
Right. Or maybe it's, happening through Bessent. If Bessent is talking to Hegseth on one call and then talking to Warsh on another. I mean, there probably is some level of that going on. But again, the pain point right now for financing the war is Congress. And so we'll have to sort of see. That's the first step. And then what that does to how we finance that, the cost of it, that'll sort of be seen in the fullness of time.
Got it. So Kyle, let me draw you out on the independence factor around these government agencies. So the Fed is the only one left now. What does that mean? Are we in a Wild West from a regulation perspective?
Well, we're in a new era for sure. I think what we're going to see and have seen during the Trump administration thus far is a lot more harmony among financial regulators. They're on the same page more so than they have been in the past. Whereas one of the legacies of this sort of independence for certain agencies, this sort of trust in technical experts, is that each of these agencies has been able to say, these are our priorities. This is what we're going to focus on. This is how we're going to approach, X, Y, and Z. And that may have overlap with other agencies, but if our prerogatives do not align fully with, this other agency's prerogatives, we're going to live with that. That's fine. And now what we're seeing is, everything is sort of unified, for better or worse. You may see these policies as being pro-growth and helping pave the way for innovation. You may see them as being a little bit reckless and kind of encouraging a lot of risk taking. However you view it, we're not sort of guessing how one part of the government is going to interact with the other. So that could have implications near term, long term. I think there certainly is a bit of a pendulum effect that we could see if there's a change of administration. Perhaps a Democratic president says, we're going to take this unified approach and be pro-regulatory. We're going to really clamp down on things. And then you'd have sort of an acceleration or an exaggeration of what we've had to this point over the past several administrations, where regulation goes on and on. And I don't think that that's necessarily a good thing for the business cycle if you're having to try to anticipate what your regulator is going to do next. So that's definitely something that everyone throughout financial services should keep an eye out for. There is still a little bit of a buffer in the sense that you need to have heads of these agencies be Senate confirmed, and perhaps that is a little bit of a governor going forward, but we're definitely setting up for an area of bigger swings on the policy front going forward.
Interesting. Okay. Well, I guess we all better buckle up here.
Yes, indeed. Indeed.
So a lot of what we talked about today stems from an article that you published on July 20th. I will include a link to that article in the show notes of this episode.
Appreciate that. And it's great to be here, Roland.